Welcome to Peak TV. I'm Niv Dagan, Executive Director of Peak Asset Management, and we've got Andrew van der Zwan, Chairman of MRG Metals. Andrew, nice to see you again.
Hi, Nev. Good to see you.
Andrew, just firstly, the license transfer is imminent. How much of the initial $3 million the deposit from Sinoin, has already been spent? And what activities are SLC funding right now?
Well, SLC to date have probably spent around about $1 million directly with activities that we would normally have been involved in. Outside of that, I think it's important for shareholders to know that SLC, the entire organisation, is 100% focused on driving this project to production as quickly as possible. So I can't give you an exact number as to what they've internally spent, but their organisation is 100% focused on the development of the project, predominantly in Corridor Central at this point in time.
And that just brings me to the second question. I mean, is Sinoin continuing its support for MRG's management and in-country cost beyond the initial commitment?
All the in-country costs now, Niv, are being paid for directly by SLC. The organisation is effectively split into two, the majority of which is now with SLC looking after the development of the joint venture project. We still have a small operation in Mozambique, obviously, to look after the remaining assets that we have. But the segregation of, or the line of responsibilities is split. We continue to operate a small team in Mozambique as we look to further our exploration programs. But the joint venture has taken over control of the operations of the joint venture activities.
And I know, me and you've spoken off camera, and there's a lot of interest from the Chinese to really progress it into production. So, what valuation, kind of valuation uplift, could MRG see if this transaction into production over the next 12 to 18 months?
Well, it'll all depend on ilmenite pricing, obviously. But the good news is that we're seeing some stabilisation and improvement in ilmenite pricing. We will be predominantly an ilmenite producer. As you know, most of the sand that we have is an ilmenite based. We have some zircon and some rutile, but predominantly it's an ilmenite play. So we're very much linked to ilmenite pricing. The advantage that we have, though, is that I'm very confident that we're going to sit at the low end of the cost production curve. We've got grade at surface, we've got proximity to infrastructure, electricity, human resources. So we are in a great position to produce whatever concentrate we can at the lowest cost as possible.
That's excellent news, because obviously that increases the NPV of the project. And so just on Linwani, I mean, once again, we've spoken, I mean, the significance of it. I mean, I don't think the market realizes how big this Linwani license potential has. And given its high grade and full funding under the JV, what's the strategic value for it?
When we acquired Safala Resources in Mozambique, the Corridor Central, Corridor South projects were the predominant plays because of their scale. We're talking over 2 billion tonnes of resource, and I don't think people fully comprehend how large that is. But a real sweetener that we had was this Linwani project that Rio had drilled some wide spacing holes a number of years ago, and they found exceptional grades. Now, why did Rio not pursue that further? Well, if you look at Linwani, it's a relatively small coastal bound asset. They were looking for elephants, and it probably wouldn't have sat in their portfolio. But for us, the great news is that we have it 100% at this point in time. The joint venture has its tentacles on it in the long term, but in the short term, it's 100% owned by us. It would be a company maker on its own. We're keen to get out there and explore, but we'll time that as appropriate. But the early results that Rio got were unbelievable, and we're excited to actually have that now in our portfolio, and hope to be able to get on the ground in the next few months.
And Andrew, how does the Sinoin being responsible for the offtake de-risk the early stages of production for you?
Yeah, this is probably one of the biggest features or advantages of the joint venture for us. And when I talk to shareholders, we often talk about, what are the off-takers going to be, where are they going to be placed, etc. One of the advantages of having the Chinese behind this project is that they have access to multiple off-take potentials, and they're going to look for optionality as we progress this project. If you put that into context of what would have happened if we'd looked to finance this project on our own, it just would never have got off the ground. First of all, getting finance in an African country as a small Australian junior exploration company would have been very difficult. But when we were talking to financiers a couple of years ago, it was clear that they wanted a locked-in off-taker before they would even talk to us. So it's a
Mm.
chicken and egg situation for us, and having the Chinese now as our joint venture partner just takes that risk totally off the table. And the other aspect that we would have probably had to provide an off-taker with multiple tons of sample resource, and we just didn't have the capacity to do that. We probably would have had to build a pilot plant. Would our shareholders have funded a $10 million pilot plant? It's difficult to say. So we're in a position now where that's all in the hands of our joint venture partner, and they have a totally different perspective to off-taker agreements than we do, and they're in a much better position to manage that process than we would have.
And Andrew, how does MRG compare to other HMS players in Mozambique? I mean, particularly in light of the recent $1 billion offer for Kenmare.
Well, Kenmare, I mean, it's very hard to draw a parallel between Kenmare and us. I mean, they've been in operations for decades now and done very, very well. It appears that one of their former employees and significant operators in the company has come back and launched a takeover, getting funding out of Europe, which is very exciting for Kenmare shareholders. It looks like they're still in that discussion, and I'm not privy to what the key aspects of that negotiation are. The positive for us is that there's a project, HMS project. It's an ilmenite play. It's a low grade but higher valuable constituents. But the fact that there are people prepared to invest $1 billion in Mozambique to acquire an asset is really positive for us. And when we talked to the Chinese initially about getting involved in this project, they were keen on looking at an exit strategy, whether it be from a third-party buyer or looking to float this project in Hong Kong itself. So the more people that are investing in Mozambique, the better for us, because that will
Mm.
identify the value, and therein lies the opportunity for us into the future.
And that brings me to the other question. I mean, we've seen institutional funds recently increase exposure to Kenmare. I mean, do you see that trend benefiting, the companies like MRG in the region?
Yeah, not directly, Niv, but if you look at it from a valuation perspective or an alternative valuation catalyst, the fact that, as I said, people are prepared to invest $1 billion in Mozambique has only got to be positive for us. If you look at the scale of our project and the low cost nature, but you're looking at an asset that might produce strong cash flows for decades, and that'll be attractive to multiple parties, including spinning it off as an asset on another exchange or finding a third party buyer.
I know we haven't talked about the NPV numbers, and you're talking about production, but just give us sort of half rough ideas. I mean, the mine life, how long will it take? Sort of what it will spit. You think conservatively?
Yeah, well, the stage one, stage two, stage three milestones for the joint venture are quite significant. In fact, the stage three milestone of 440,000 tonnes per year is analogous to about a little around two-thirds of what we did in the joint in originally in our scoping study as a standalone scoping study.
Mm,
Um, so if you go back to those numbers, we were talking about a significant NPV, well in excess of 200 million. The excitement for us is that what we've learned subsequent is the opportunity for us to drive costs on this project. And one of the things I can tell you, the Chinese are really focused on is driving costs. So they're going to drive the cost of production down significantly on the low curve. The other thing that I think it excites me is the fact that they're going to get onto this quickly and as low cost capex as they can. Now we would have engineered it to death. They will do. I mean, they'll do their due diligence, and we'll obviously be on top of that. But they will get to a position of spending capex at a much faster rate and a much lower spend than we probably would have. So
mm,
for investors out there, I mean, it's a bit hard to compare our original scoping study, but if you're looking at a low cost production, circa $100 a ton of concentrate, that can give you an idea of where we see this
mm.
coming out. Then if you look at ilmenite pricing and the various other components of the concentrate, you start to see that it's a pretty leveraged player to volume, and obviously being low cost allows us to thrive in any environment. And if ilmenite prices continue to improve and consumption of titanium oxide continues to grow around the world, then we should be in a good position to leverage strong cash flows against that.
I mean, and that's the point. I mean, before we talked about titanium oxide, but just the fact that I think the market is really not factoring in is the fact that you are actually speaking to the Chinese. What you have once a month or once every few weeks correspondence with them in terms of board meetings and official discussions? I mean, how often are you just, talking to the other, to the group SLC?
Well, we've had 11 board meetings formally, but we obviously communicate on a more regular
Mm.
basis. And look, our shareholders are rightfully frustrated about some of the progress in terms of the issues surrounding Mozambique. But um, from the Chinese perspective, they're just ploughing ahead and progressing this project as best they can. I mean, if they wanted to stop the project, they've had plenty of chances to do that. I know shareholders have been wanting to see the $3 million deposit in the joint venture bank account. It almost becomes irrelevant now because their spend has been, probably, if you look at internal costs, they've probably spent that much already as it is. They want to get into production as quickly as possible. They probably set unrealistic targets in terms of their timeframes, but once they get the green light on some of these things, they will go very, very aggressively.
And
Um,
that's the key,
and
right? The license transfer is really what we're waiting for. I know me and you've been speaking about it, and that, obviously out of your hands, but it is imminent. And as you mentioned, there's probably around $3 million of all-in costs that the Chinese are there, and the fact that you're currently, obviously speaking to them regularly. I mean, it's just a matter of time, right? So fast forward 6 months' time, we feel that the company's going to be significantly de-risked from where here, and and the stock really hasn't moved. So it's a really big opportunity for investors to come in. Um, and I just want to talk about, I know, sort of conscious of time, MRG basically taking a big position and advantage of the rising demand for titanium oxide. Um, what role is titanium metal playing globally, you're saying?
well, titanium oxide is predominantly a consumer-based product. It's used in paints and whiteners, etc. Then you've got the technology side, which is the use of titanium metals and their oxides in various, aerospace and high-tech industries. So you can't see a diminishing demand for those products as the world as more people move into middle class and they're able to expend dollars like you and I can on white goods, etc. I mean, the consumption of titanium oxide will increase. And if you look at the demand supply curve, we're in a pretty favourable position.
Mm.
There hasn't been a lot of large HMS mines because, as I've said to you in previous interviews, I mean, it's an unsexy product. It hasn't had the excitement of lithium, or today we can talk about gold and silver being the very popular metals at the minute. But HMS, titanium oxide, really hasn't hit the radar from an investment perspective. But what excites the Chinese is the size of the project, the scale, the longevity of cash flows, and that's where I think the opportunity is for our shareholders. And longer term, if the project hits scale, there's no reason why it can't be increased and become a marginal producer.
I think it can be sexy. I mean, aerospace, defense, data centers. I mean, there's huge opportunities in titanium oxide, and we're really strong position. So, just on the last point, Andrew, this $50 million drag along clause with Sinoin, and what it means for as potential shareholder return given our market cap.
Well, we actually put that into the contract to protect us because we're a minority player, and we didn't want to be held hostage to a majority player looking to either uh, exit via a lowball, what we would perceive to be a lowball offer, and we'd have to accept that,
Mm,
or for them to, if they were to wanting to manage the process in terms of moving assets into a different vehicle. We just wanted to be protected, and I think that was the prime objective of that. I don't think it forms any relevance as to what we see of the value in the long term. It just is a placeholder that makes sure that worst case scenarios, we have some level of protection if the assets wanted to be acquired
mm.
outside of our control. That's really what it was.
Andrew, it's been great. 14 minutes. It's a really good interview. Really excited. As you know, we're major supporters and major shareholders and want to see the company succeed. So well done and good to see you. And thanks very much for joining us at Peak TV.
Thanks, Nev, and thanks for your support. Thank you.